Facebook's parent company Meta has laid off 11,000 jobs globally. The company has taken this step to cut costs. The move comes days after Twitter fired more than half of its workforce. It also comes at a time when big tech companies like Amazon and Google have announced a freeze in hiring. The move has been confirmed by Meta founder Mark Zuckerberg, who said he has decided to reduce the size of his team by about 13% and let off more than 11,000 of their talented employees. For more on this, we're joined by our tech editor Ayush Alawati, who's currently in Boston, USA. Ayush, the mood quite somber on account of these mass layoffs that we're seeing in big tech.
Abha, you summed it up perfectly. Somber is the mood. In fact, at breakfast earlier today, I was sitting with a bunch of tech journalists who cover these FANG companies, and the mood seems somber because they've been in touch with their sources, and of course, so many people at these tech companies. 11,000. Right now, that is a massive number. That's nearly 13% of Meta's workforce. And this is a company which was valued nearly at the $1 trillion mark almost a year ago. Spent lavishly over the years, acquired companies like Instagram, WhatsApp, did all sorts of things, copied all sorts of features, had massive scrutiny over its data practices. None of that made a dent in terms of what Meta stood for. But it seems like this one costly bet called the Metaverse, ironically that's what it's called, has really cost him dear. They posted a 50% slide in quarterly profits last month, and of course their stock has dropped nearly 70% this year. The mood is truly somber, especially like you said. This comes with a spate of other layoffs in the top tech companies here in the US. We saw what's happened at Snap. There's tech hiring freezes all over. And of course, we've also seen what happened at Twitter. But with Twitter and Elon Musk, there was a U-turn here. Of course, employees would hope that's the case, but it's seeming like it's most definitely not.
Ayush, thanks so much for taking us through all the latest, and we hope to see more of you while you're there in Boston. Meanwhile, the Lal Street witnessed a choppy session back home, the two major indices ending slightly lower. The benefit of gains in banking stocks was offset by the impact of weakness in global markets. Despite the Nifty 50 and Sensex hitting their near 10-month highs over the past two sessions, gains were limited as the underlying worry of expensive valuations prevented investors from placing aggressive bullish bets. While the Sensex lost 152 points to end at 61,034, the Nifty was at 18,157 at close. Top gainers today: Adani Ports, Coal India, ITC, Hero Motors and Dr. Reddy's. Meanwhile, on the losers end, we had Hindalco, Power Grid, Divi's Lab, Tech Mahindra and Grasim among a much longer list. For both a strategic and a short-term view on stocks, Business Today TV Global Business Editor Udayan Mukherjee and I spoke to Amit Jeswani, founder and CEO Stallion Asset. Here's a chunk from our conversation.
Amit, great to have you on the show. You know, I see today that many fund houses, many PMS schemes have quite a bit of cash running on their books, including you. Has the market up move to 18,200 Nifty, etc., come as a bit of a surprise then? Is there even a feeling that the market might be a bit ahead of itself?
So good evening, Udayan. Good evening, everyone. Thank you so much for calling me on this show. Udayan, this cash is for the earnings season. The markets are moving quarter se quarter tak, and the quality of the rally for the last 2 months has been very surprising. It's the neglected stocks which are doing well. The PSU banks, sometimes it's the defense companies, now the railway PSUs are doing very, very well. So the quality of stocks that we typically look out for, the ones which are growing at 20-25%, can reinvest capital at 25-30% ROICs, they've just stayed where they are. So the quality of rally in India is gone a lot more weaker than what we would be happy with. And 73% of quarterly numbers which have come down, the stocks are down more than 5%. Just tells you, if you're not a PSU bank, the markets are bidding you down on any kind of quarterly number. If it's very good, then the stock will be down probably 2%. If it's bad, then you're down 7-8%, which happened with DVs today.